As we have pointed out, our latest cyclical outlook, 7th macro themes for 2020, while we see an improved baseline outlook for the year ahead, there are potential for significant bouts of volatility caused by geopolitical and various disruptors around the world, which Asia will not be immune. Delving into the Asia credit market, our previous stance still holds. Valuation of Asia high-yield credits remain attractive. What's changed, though, are the forces at play in fundamental and technical conditions. When looking at the fundamentals, we see headwinds both from China and India. First, the effects of credit stimulus in China are fading. Recent defaults are of concern, while the lack of credit transmission, owing to risk aversion and capital constraint among weaker banks, is a challenge for policymakers. Despite some adjustment in interest rates and cuts in reserve requirements, the uptick in bank lending has been milder and slower. In India, too, the credit transmission mechanism is under pressure, despite cuts of 135 basis points to the headline policy rate by the central bank in 2019. The total flow of financing to the commercial sector fell significantly due to growing risk aversion among non-bank financial following a string of high-profile defaults. Sectors most reliant on funding from this channel, including real estate and small and medium enterprises, will be hardest hit. There are positives in the pictures as well. Corporate fundamentals in Asia remain largely intact. Revenues and earnings rose in double-digit percentage year-on-year in the first half of 2019 compared to the second half of 2018. While concerns also have risen about defaults in China, we expect the market will remain orderly as weak issuers work out their debt restructuring situations. We expect the overall Asia offshore default rate in 2020 to be in the benign range, with some Chinese industrial and weaker local government state-owned enterprises being vulnerable. In terms of technical picture, we forecast that gross credit issuance in Asia will be slightly lower in 2020 compared to last year, given there is less aggressive borrowing from the Chinese property sector, despite the policy having shifted from tight to more neutral. Gross issuance in 2020 will largely come from state-owned enterprises, China property, LGFVs, financials in Hong Kong, South Korea, and China, as well as sovereign issuers. Inflows to Asian credit funds have been positive, and onshore demand remains intact, as reflected by positive net foreign currency deposit growth. Chinese demand for offshore bonds will continue to depend on the availability of investment quotas, the renminbi-US dollar exchange rate, and the relative yield of offshore and onshore bonds. Within the Asia high-yield market, our core overweights are in selective big-cap properties and more defensive or resilient sectors such as infrastructure, renewable energy, and gaming.